Bitcoin is likely to repeat what it did in the fourth quarter of 2020 this week. 5 things to watch for Bitcoin. Bitcoin starts a new week facing multiple hurdles, but with strong internal support. Can old resistance below $50,000 finally fall? A correction event now almost in its third month is frustrating many, but conditions may soon be right for a fresh charge against opportunistic bears. An increasing number of analysts are saying, with inflation running hot and United States lawmakers set to make the Bitcoin mining debate public this week, there are plenty of potential pitfalls in store. Nonetheless, it's beginning to feel like Bitcoin is at the point where it is capable of producing a classic surprise when the majority of the mainstream economy least expects it. Cointelegraph takes a look at 5 factors worth paying attention to when charting BTC price action over the coming week. Bitcoin looks decidedly uninterested in tackling even local resistance levels as the week begins. After a range-bound weekend with little unique price action, BTC or USD is putting in lower lows on short time frames, while avoiding key zones around $44,000. With Wall Street closed for a holiday, Monday could shape up to offer more of the same before markets provide direction. Bitcoin did, however, manage to close out the week at exactly the crucial point identified by trader and analyst Rect Capital as useful for aiding bullish momentum. A weekly close above $43,100 would be a good sign of confirmation for BTC to continue higher from here, he wrote Sunday alongside an accompanying price chart. A subsequent dip took the largest cryptocurrency lower, with $42,337 on Bitstamp, the local floor for Monday at the time of writing. Also cautiously optimistic is fellow popular trader Crypto Ed, who is eyeing a potential replay of last week's run above $44,000, something that bears subsequently quashed. Although it's early, but this looks like the start of continuation of last week's move. Fingers crossed. He summarized in part of his latest Twitter update. Last week, meanwhile, Cointelegraph reported on sentiment favoring an upside breakout as an eventual outcome of the current ranging behavior. The stage is being set in more ways than one this week, as the topic of inflation returns to haunt U.S. markets and politics alike. Amid a fresh flurry of headlines about how inflation is hitting consumers, the highest consumer price index print in 40 years is already hitting President Joe Biden's approval ratings. Reining in the 7% year-on-year CPI increase could see the Federal Reserve enact no fewer than 4 key rate hikes in 2022 alone, Goldman Sachs forecast last week. This, in turn, places more pressure on weary consumers. The stage is being set in the coming weeks, Pentoshi argued. Closer to home, this week will see U.S. lawmakers discuss the alleged environmental impact of cryptocurrency mining. With a significant chunk of the Bitcoin hash rate now coming from the U.S., any hostile policies will matter more than most when it comes to sentiment. A repeat of the China exodus from May 2021, and its knock-on effect for hash rate and network security, will not be welcomed by anyone. The hash rate, as Cointelegraph noted, is now back at all-time highs, fully recovered from last year's event. The Oversight and Investigations Subcommittee hearing is due to take place on Thursday and is titled Cleaning Up Cryptocurrency: The Energy Impacts of Blockchains. The hearing will be live-streamed in real time on the day. Bitcoin volatility is plumbing multi-year lows, encouraging for its acceptance as a mainstream asset, but not something many expect to last. According to the Bitcoin Volatility Index, which calculates the standard deviation of daily BTC returns for the last 30 and 60 days, Bitcoin is at its least volatile since November 2020 at 2.63%. Current price movements are thus similar to before BTC USD entered price discovery after cracking its $20,000 all-time high from 2017. For trader, entrepreneur and investor Bob Lucas, the stage is now set for a potential repeat of those events. Remember when everyone was loading up BTC options in September, October for the supercycle? Those are probably down 80+%, he commented, noting that derivatives traders from before the current $69,000 all-time highs are likely more than disappointed. While exciting price moves are yet to reappear after December's drawdown, however, they are now all the more likely thanks to Bitcoin's supply becoming increasingly inaccessible. With a liquid supply at 80 Hs for this cycle, Bitcoin is essentially a bonfire covered in gasoline, market commentator Miles Johal argued. As Cointelegraph reported, BTC is being ferreted away into cold storage out of the grip of speculators. Amid questions over the absence of retail investors even after a 40% price drawdown, new data shows that the sector has in fact had little interest in Bitcoin for an entire year. Eyeing new entities appearing on the blockchain, Glassnode analyst TXMC showed just how quiet Bitcoin has really been in terms of retail adoption since January 2021. A look at the 30-day exponential moving average of new entities coming on-chain reveals that the last major surge ended at the start of Q1 last year. Since then, despite 2 new all-time price highs, new entity numbers have fallen and returned to standard rates normally seen after bull cycle peak. Bitcoin bull or bear markets have a distinct on-chain activity profile, TXMC explained on Twitter. The data underscores how the average investor has all but forgotten Bitcoin, even as it swept new highs, and institutional activity remained strong. Interest levels from Google users have added to the trend, with search rates for Bitcoin worldwide at levels previously the norm in December 2020. Miners, although being far from underwater at current price levels, are also getting less income from transaction fees than at any point since late 2020. Just 1.08%. This is an indicator that retail is not in yet, although price is really similar to early 2021 when retail. Twitter-based on-chain analyst Blockwise queried this weekend, presenting further Glassnode data. Bitcoin's New Year extreme fear continues, and if on-chain behavior is anything to go by, it's set to remain the dominant sentiment force. Related, top 5 cryptocurrencies to watch this week: BTC, NEAR, Atom, FTM, FTT. According to the Crypto Fear Greed Index, which measures market sentiment via a basket of factors to assess just how traders are likely to act at a given price point, things have rarely looked bleaker. Since late December, the index has characterized the status quo as extreme fear, and so far, no price shifts have managed to alter it. The same is true this week, with fear greed at 21 or 100, well within the extreme fear bracket. Similarly, data covering BTC moving at a profit or loss shows timidity among transactors, with precious little profiteering to be seen. Such behavior is common during price dips and was seen last year during the summer as BTC USD fell and bottomed at around $30,000. This is the real fear greed index, popular Twitter account On-Chain College commented, uploading the data, which comes from Glassnode's realized profit or loss ratio indicator.